What does it take to scale to 7 figures and beyond and grow with purpose? Tune in for stories, strategies, and tactics from founders and business leaders who've been there and done that. Welcome to another episode of the Scaling Business Podcast. Today, I'm really excited to be catching up with my good friend, Stuart Snyder. I've had the privilege of knowing Stuart for now close to 13 years since we met at Majoran, the original co-working space of the Adelaide tech ecosystem. And Stuart has been heavily involved in the startup ecosystem as an investor, as advisor, as a mentor. But I wanted to sort of start off by going back a little bit further behind and getting to understand your journey and how you ended up getting to that point of becoming Stuart, the startup guru. Going back to the early days for you, was this business investing thing a thing for you, or how did you get into it? How do you get into the business world?
Yeah. I have a unique background in that I grew up in what's now Silicon Valley. So my parents bought a house in what used to be an apricot orchard in 1969 in Cupertino, California. And that whole area was known more for fruit canning than anything else. It was an agricultural region. And I had went to high school with Steve Jobs, who
Yes.
I knew as a long-haired hippie, really different, but nothing exceptional stood out about him. I had better grades than him. He wasn't charismatic at that time, and nobody really would have thought much would have come of him. But then when he founded Apple and it listed in the stock exchange, I think it was 1980, then that whole area changed. And then all those people who overnight became millionaires, what did they do? They reinvested their money in the next generation of startups. And so then there's been many, many generations. And I wound up, I left home at 19 and joined the American Navy, where I first went to Kenya.
Yeah.
But I loved traveling, and so I also realized I didn't love being in the Navy. So I went back to the university, got a degree in accounting at San Jose State University, traveled around the world for 6 months. Last 3 months were on a bus from Nepal to London, where I met my future ex-wife, who's from Adelaide. And that brought me out to Adelaide in 1993. But prior to that, I had worked as a qualified accountant. I had 6 jobs in 10 years out of university, which would be unheard of in Adelaide. But there's such a great job market. It was really easy to pick up a new job. If you didn't like the boss, you moved on. Maybe you were made redundant, you moved on, and I always got paid more. And then I moved to Adelaide in 1993.
Okay. What was the experience like settling in a new state, new place, completely different culture?
Well, I took the first job that I came along and was with a defense company, and this was right after the state bank failed in Adelaide, and the unemployment rate was like close to 10%. Housing was very affordable then, but I worked in a defense company with the brightest group of people I ever met, and they signed up $30 million in contracts within 2 years while I was there, and it went from a handful of people to 55 people. But that company was indirectly owned by the state government, who got rid of it as soon because they had assigned performance guarantees, and they didn't want to be liable if things went wrong on these contracts. And then we were made redundant, and I always told the people I worked for there we should start our own company, because that's the culture from Silicon Valley. And I didn't realize that wasn't very common here in Adelaide, but I did a few other things. And then in 1999, I co-founded a company called YourAmigo with the people from the defense company and another person that was a founder of Alex Medical Laser. And based on an idea that came out of the Flinders University, this was the end of the dot-com boom, so we were caught up in that hype. An idea that it could find information in databases that Google couldn't find, and we went through a number of pivots until we found our way. Fortunately, our CEO was very charismatic, and he convinced about 80 Adelaide investors over 6 years, from 2000 to 2006, to invest about $4 million. And we matched it with grants. And we found our way, though. We got large websites to rank high in Google for thousands of keywords using technology, where at the time, other people, it would be called SEO. They would have people write up web pages and things change. Ours was very dynamic. It would keep up with anything on the site, and we would create new pages, so we could increase traffic and conversions by 3 to 20%. And all our customers were in Europe, a few in Europe, but mainly USA. And some of them were paying us over $1 million a year.
Oh, wow.
And we were sending a lot of traffic, and we became overnight massively profitable. And the company paid out about $60 million in dividends, which is a pretty good story for Adelaide.
That's
company.
Pretty good.
And then when we tried selling the company overnight, Google punished our sites for the first time.
Oh, wow.
So it went down in the ranking, and I had been there 12 and a half years. I had made enough. I didn't need to work, so I essentially retired. And then I needed some things to do and wound up mentoring.
Yeah. How was a transition like for you in terms of now coming from growing that business to now investing? What was the transition like for you?
Well, actually, it's a pretty easy easy transition, because when you have enough financial resources, you don't need to work, you don't have to worry about money. It took off enormous stress. The first 6 years of YourAmigo, we were loss making, and every Christmas I couldn't see how we would be in business for another 6 months. It was incredibly stressful. Now all of a sudden I'm well off, and I thought, I want to change Adelaide, because I saw a lot of really talented people that were underperforming their capability. And I knew from Silicon Valley, if you had smart people with smart ideas, you could create a very successful business anywhere, especially with the internet. And that was my motivation to becoming a mentor. And through the mentoring, I started building relations. And I wound up investing in 8 startup companies. 7 started in Adelaide, and then I invested in the first 4 Blackbird Ventures funds. The first fund invested in the seed round of Canva, so that investment is up 40 times what I invested in, although I've gotten back in cash 10 times my investment. And then I've had my other 2 big successes in angel investing were HappyCo with Jindu Lee.
That's a good company.
Yeah, he did a mobile app for property inspection. What I liked is him as a founder. I thought he was very dynamic. And so that investment is up about 20 times. I had an opportunity to exit a few years ago at about 10 times, but I thought it had some upside, so I held on. And then the other big winner is MyVenue, which does a point-of-sale system for stadiums. They're in over 160 stadiums in the U.S.
That's awesome.
Growing, doubling revenue in every 9 months. So I would estimate that the value of that investment when I eventually exit will be over 50 to 100 times my original investment.
That's pretty
But
decent.
the nature of these things is many of these things don't work out. So you got to get a few big winners in
Yeah.
there. And
Yeah.
the other thing I've learned is that in the old days, like when I was doing YourAmigo, probably exits would happen, which is returning cash to the investors.
Yeah.
Might take 8 years or so. Now we're looking closer to 15 years, and so it almost doesn't make sense anymore to to be an investor.
Okay. Yeah, because that's a long time. But I think is that where you have to be an accredited investor for you to be able to do these things, or is that because of the long-term
this
nature
is
or the risk?
the Australian law, and I think there's similar things in America. In Australia, you had to have like income of 250,000 over 2 years, or a net worth of over 2.5 million, and they were trying to bump this up to become an accredited investor. However, there is an exception there that it was like you could get 20 investors who were not accredited every year if you could convince them to invest in you.
Okay.
But it does make it more difficult for smaller investors to invest in a startup, because startups would rather have accredited investors on their books rather than a lot of smaller investors.
Yeah, managing. One thing I'm gonna ask you is, so if you go through your portfolio of the investments you've made so far, what was your and obviously now that you've got a little bit of benefit of hindsight to see which are the winners and which are maybe not so winners, or whatever you want to describe them. What is it about the ones that did very well that really stood out for you in the beginning, or was it a benefit of luck? And what was it that stood out for you in those startups in the beginning?
First of all, I think let's talk about Blackbird Ventures portfolio companies. They started out with a very small fund of $29 million, and it didn't close till 2013 when I invested. And this was a time when Australian startups, some of them were starting to become successful, like Atlassian. Were the founding investors in Blackbird. They knew Nikki Shavak. He was the roommate of Mike Cannon-Brookes. So they were a cornerstone. And I said, well, look, if they're in, then I'm in. You have all these famous, well-known Australian startups. And I knew that it would change, because I knew from my days in Silicon Valley that the people there were no smarter than the people here. Here we had a lot of smart people, but it would be hard to get investment and funding. So I thought, well, this would make a difference. And they invested in the seed round of Canva, which is doing about $3 billion a year U.S. revenue.
Yeah.
They invested in seed round of Safety Culture and Culture Amp, which are also worth a couple $1 billion. So that first fund is up about 40 times on paper. And this is another important thing.
Yeah.
It's all on paper, until you get cash in the bank.
Yeah.
But their subsequent funds are doing okay. But I would suggest that from what I see, and from a top quartile venture fund does a return of 3 times your investment after 10 years, well, you could probably get that sort of return just by investing in the NASDAQ, which until the recent crash was worth something, but was doing about 20% a year over 10 years.
Okay.
Or the S&P 500, which was doing 12.5%. Those are safe investments that are liquid. You could sell any time. Then with each one was different, but one advantage I had with my angel investments, in Adelaide, there isn't a lot of competition to be an investor. And I got to know these people over a long period of time to see, are they people who can get things done? And Jindu had always impressed me. He came back here. He said he went through StartMate and raised about $600,000, and he went to another 500 startups in the US. He said I couldn't find investors in that, and I said, look, I'd be interested. So I invested in his seed round, and he's just a really dynamic individual. The market I didn't think was huge for a mobile app for property inspections, but I thought he was an outstanding founder. Then with MyVenue, I had known the founder, Tim Stolz, now for many years. He had exited a point-of-sale system company in 2007. He sold it for $60 million. And he said, well, they haven't kept up to date with mobile technology, so we're looking at getting the team back. And I said, yeah, well, I've never invested in an Adelaide company that had a successful serial founder like that. So, and then a week after I committed to invest, COVID hit. And I thought, oh, what a dumb idea. A hospitality software. Yeah. It turned out to be the very best time, because while he was spending a year developing his product, all his competitors were going out of business and struggling. So, and then he comes out with something that's way better than everything else. And he moved to Atlanta, and the same with Jindu. He had moved to San Francisco, then San Diego. So I think and same with our company. We had a very strong presence in the U.S. and went to a lot of trade shows. But that's one of the keys. I tend to look, though, at the size of the market opportunity. And some of the other companies that I've invested in, I think still have a lot of upside. Some of them taking a bit longer. But I think you have to have something really unique that's way better in a large market.
One thing you mentioned a lot is having obviously grown up in Silicon Valley and seen it metamorphosize from literally nothing to being what it is, and having been through that culture. And you've mentioned a lot of things about, like, you even went to school with Steve Jobs, and you mentioned over and over again that you've seen some of those guys who do incredible things but are not necessarily smarter. Now you've had the chance of living in Australia for 30 years. What is it about our ecosystem here that we're not doing, and yet to say they're not necessarily smarter than us? What is it about our ecosystem that we're not doing here that could be done? And I want to, I guess, from a lack of a better word, talk of answers from an individual point of view. Forget about the government and stuff like that. Yes, government can do and stuff like that. From an individual point of view, like founders and stuff like that, what are some of the things we could be doing here as founders and business owners to be able to sort of produce some cool, epic stuff? Do not hold back.
Okay, well,
no holding back. No gloves off.
Well, there's pluses and minuses of everything. Well, we actually have some advantages, which I'll talk about. But first, what I saw as the weaknesses of our ecosystem. When I came here, I had struggled. I went a year without finding permanent work in 1995. The fact that I was a qualified accountant with an MBA with experience in Silicon Valley didn't matter. And that kind of forced me into thinking, why not do a startup one day? Because it'd be difficult to find a decent work in Adelaide, and it was my experience. But a huge difference is everyone I knew here was working either directly for the government or some government-funded agency, maybe a university or a council. Where in Silicon Valley, everyone worked in a startup company. All the people I worked with at KPMG, they all went and worked for a tech company. So you have to get really good ideas. It helps to have worked in an industry, and so those are the people that will form another startup. Where do you find a startup founder? Not too likely they'll come out of the public service. Maybe they come up with some idea for the defense industry. That was true in Silicon Valley. But I think that's one of the weaknesses. Not a lot of industry here for people to find and solve problems.
So we're so reliant on government or similar type industries, as opposed to when we don't have enough of those innovative, like cutting edge industries, enough of them to be able to produce the kind of caliber we need.
Yes, because what happened when Apple listed, all the people who made money there invested in the next generation of startups, and a lot of people left Apple and did a startup company, sort of like the story with PayPal. All those people went and did startup companies. So you need to have that base. And also, there's no history here of investors making a lot of money. So when Apple listed, all of a sudden people said, yes, I want to invest. Where here in Australia, it's always been, oh, that's really risky. Superannuation funds banned investing in startups or venture capital because the history was it was loss-making. Now that's changed because especially Blackbird Fund, it's up, the first fund up 40 times. Investment in Canva, that is lifting the performance of those super funds, but that's what will attract more investment capital. And the other thing I saw firsthand is the market here to find customers are very risk adverse. They don't want to try something from a small Australian startup company, where when I went to the US and went to a trade show, they thought we could be the next Google, and they were excited. And you would meet, it's such a big market, maybe you might meet 10 prospective customers, and one will say, yeah, we'll give it a try. Where here you meet a couple and they go, no, it's too.
They want something that is tested and proven. And I think it's the same, because I was talking to someone like the previous podcast interview that I've just done before this one, and that was just a common thing they mentioned along the lines of like, even governments themselves are more likely to buy solutions from big established multinationals as opposed to working with the local consultants who can be.
And the worst one I saw was the state government of South Australia. Like, they don't want to know a small company. There were a few initiatives to try to bring in small companies and technology, but I haven't seen a huge change. But, the state government employs 100,000 people. And if they buy local, that gives it's a real shot in the arm for a small innovative company.
It would.
Yeah, but interesting. Like YourAmigo, my company, we had no Australian customers.
Wow, not at all.
None. No, we tried, and
like you had an entire company that did millions of dollars. Right here in Adelaide, had 0 Australian clients.
Yeah, what we found, we tried early on, and they were slow moving, didn't want to give it a try. They want to be exclusive even though there's no competition. And we thought, well, for the same amount of investment in salespeople, we just go to the U.S. and have people work out of their homes and go to trade shows, and we can meet customers that are 10 times the size of here that could really make the company if we perform. Another investment in MyVenue, he's in the biggest stadiums in America, the Los Angeles Coliseum, Miami Dolphins, Arizona Cardinals. They were in the Super Bowl. He doesn't do any stadiums in Australia, and it just seems like they're not willing to try something new or slow moving. I don't understand it, but I think it's part of the culture.
But that's crazy. So I often find sometimes companies will start here and then they would struggle to like really commercialize and scale it, and then they will probably do the US thing, and then once they've proven themselves in the US or other markets, then people here would trust them. You're saying for you it was just too hard, you're already too entrenched out there. Did you ever come back? Did having that windfall in the US help you at all in terms of being able to get clients here, or it was a case of by that time the business was so entrenched in those markets?
I'm sure it would help, but the point is the U.S. is 15 times the size of this market.
Gotcha.
With unlimited, MyVenue may be doing 5% of the stadiums. So he's better off investing time and money there where people, but he does have salespeople here, and they are trying to sell into Australia.
Gotcha.
But I think a better investment is in the U.S., where it's a huge market and there are a lot more customers and prospects.
Yeah, gotcha. It makes a lot of sense, because if you argue Australia, you've got a limited amount of venues for that kind of clientele. So you have to weigh. I guess it's a case of looking at effort versus return. Like if you're going to put the same amount of effort in investing in a team and resources.
Yeah, like I think, the company I first worked for in Adelaide was a defense company, but I just saw how difficult it was for a small company to sell into defense, which is very risk adverse. And you have to be a large multinational with a lot of money and time to invest in those type of customers. And same with the state government. Like if you're Microsoft, you could wait 5 years before they make a decision. But when you're a startup, you need to get customers and revenue quickly. So you don't have time to invest in that. That makes a lot of sense. All right, looking at some of the downsides of this market, what are the upsides you've seen of this market, or areas we feel like we could be very competitive here if we played it? Okay, so maybe I'll also talk about some of our advantages
some
here.
of the advantages here, that's it.
So we've talked about like the market is small and very risk adverse. Some of the advantages of doing a startup in Adelaide or Australia is the workforce is much more stable. As I mentioned, I had 6 jobs in my first 10 years out of university in Silicon Valley. Like here, someone might feel lucky I got 1 job and I'll stick with it for 10 years. And most of the people I know here, they've been in the same job 10, 20, 30 years. I mean, I can't even comprehend that. But a fairly stable workforce that is also more affordable than you would find in Silicon Valley, because there it's so competitive. Like they would pay them like they're sports stars. There'd be a bidding war to get the best engineer. Where here you can get good people who are stable, and they'll stay with it for a long time. And I think that's useful to have some continuity, like people who've been there a while, who understand your system. Where in Silicon Valley, okay, someone's there 2 years, they leave. Someone else has, that takes away a lot of knowledge. But the key to success I've found with Australian companies that have something of value that global is get into the U.S. as quick as possible. I've had there's another startup at the same time I invested in HappyCo that is been growing really slow, but it has the best technology in the world, and it's trying to complete its development so it can scale quickly. But they finally are now hiring, this is after like 12 years, like hiring people out of North America that used to work for their competitor. And what they're told is their technology is like 100 times better than the competition. Now they have to scale it so the implementations will go well or quicker. But I think that's one I invested in because I thought the market size could be $1 billion company. So I think from what I've seen, the ones that are successful, they get into the U.S. very quickly, get U.S. customers. But Australia would be a good place to try things out before you go.
Okay, so it's good Reba, good place to test things out, and when the market is, if you,
and it would be much harder here to find investment capital because of the lack of track record of success. It is much better than it was, though.
Yeah, I remember there was a prevailing statement that would probably be about a decade or so ago. They used to say, if you can make it in Adelaide, you can make it everywhere.
Well, I would counter with that. If you can make it in, you'd say the same thing about North Korea.
Yeah.
That's even harder. But why would you? And so, the 8 I've invested in, 3 have moved to the U.S., and others are getting a strong presence in the U.S.
So I want to dig into the whole moving to the US things, because obviously you are from the US, but you've started a company and moved to the US, like, going to the US. If you're, and obviously invested in a lot of startups that have gone to the US, if you're talking to a company that you're looking to invest, or maybe you're even just advising somebody, and they're scrambling to put together their going to the US strategy, what are some of the things you would be either some pitfalls to suggest to them, or things to make sure that they look at? Obviously there is the legalities and all that kind of stuff where you need a lawyer, but there's a lot of business structure type things that they need to understand as they move to the US. What would that be like?
Yeah, well, first of all, there is, like, the last company I invested in, I really liked the founder, great ideas, and he bootstrapped to about, a significant amount of revenue, and then things sort of flatlined, and he went to the U.S. to get a taste, and they have similar issues. And I said, go to trade shows. So HappyCo goes to lots of trade shows. YourAmigo went to a lot of trade shows. MyVenue went to a lot of trade shows. And all of them, like MyVenue, hired from the previous company that Tim Stolznow sold. He hired the best salespeople, and we hired some great salespeople in America who have connections already. So that's really important. I think Australia is a good place to try and test things out and trial it. So you can't go there with, something that hasn't been really well thought out. Maybe if you had a track record in the U.S., you worked for Google or had done a successful startup, you could easily get investment capital. But it is naive to think that, oh, you can go there and people will throw money at you. It's very, very competitive. There are a lot of great startups. So I think what I'm sort of seeing is the companies that do well in the long term are very product focused, having the best product, making sure your customers are really happy. And not all the American companies do that. They just want to sign up. There's a lot of pressure to grow revenue really rapidly. They can sell, and then they find out it doesn't work as well. And so the one that I've invested in that it's taken longer, their competitors are losing customers because they're not delivering on what they promised, and they can. This company can, and that's why they'll be successful in the long run.
That makes a lot of sense. So, what's your thought? Do you recommend to a founder, like, because you've had a lot of the ones you've invested in, them they've upped and moved. Jindo moved. The MyVenue guys is there, but it looks from a look of things with YourAmigo, you guys were here, but you set up the team there. Do you think it's feasible to just set up the team there, or do you recommend to someone, if you want to get the best chances, uproot your family, go live there, kind of thing? What's a
Yeah. Well, look, your
What's your
amigo
experience in
proved
both?
we
Yeah.
could be headquartered here, but we had to travel frequently to the U.S. and go to trade shows. And then as the years went by, we went to fewer trade shows. I do believe when you're a founder introducing a new product, you really belong there to sell it, because nobody is going to know your product or sell it as well as you can. But it all depends too. Like Canva, their headquarters is in Sydney, but they're mainly an internet-based company. And same with Atlassian. They sell their software over the internet. But if you're going to sell, like the one that's taken longer, that sells enterprise software, that's a long sales cycle, because what he does, it will be critical to their supply chain, and they have to make sure this won't fail. And so it may take, a year or two to sell to a billion-dollar company. The advantage of that is they will spend, $1 million plus on the software if you can make that sell. And they're unlikely to change either, because they've invested so much into that software. So I think the founder needs to be there for the initial early sales. And then the other thing is, in establishing your sales team, you want the founder there to build relations with people so that he can find and meet salespeople that are good. Because there are a lot of Americans are big talkers and big bullshitters, to be honest.
Okay.
I can sell, I've done this, and you pay them a lot of money and nothing's come out the other end. So you got to be very careful there to hire the right people.
What's your strategy for finding those salespeople, especially when you guys were moving YourAmigo to the US? It looks like your initial strategy was to hire salespeople there before you guys moved. What was your strategy for finding best team when you're here?
So initially we found people going to trade shows.
Okay.
Our CEO at YourAmigo was very charismatic and a fantastic networker, and that's how he was able to raise capital in Adelaide. 2000 to 2006, it raised about $4 million from 80 individuals, because he just networked with everybody. If you were a lawyer, he said, okay, who do you know who will invest? Who do you know and none of these people had ever invested in a risky tech startup, but he made it sound really exciting. So when we went to trade shows, you just meet everybody. Tim Stoll's now MyVenue. He would say, I went to trade shows, but then I'd find out where the party was after the trade show, and I would hang out with all these people, and I'd go drinking with them and talking with them, and that's how his original company started to scale. Is he'd meet a lot of people, and over time you build relations. In my investing, I think one reason none of the companies I invest in have gone out of business yet, which is a pretty good sign. But part of that is I built a relation. I mentored people. I got to know them. I'd see them at events, and that reduced that risk.
Okay, that makes sense. So, really, if you want to build your sales force in another country, in America particularly, it comes down to networking. You did Europe as well. Was that a similar
We
playbook
had
when you did
some
Europe?
sales in Europe. We had a sales office in the UK, and we convinced a guy who was out of work, who was a salesperson, to work on commission-only basis. And he signed up our first $1 million a year customer. And there was a period where I thought we were going to run out of money, and I told the CEO, I think we need to see if we can get venture capital. He didn't want to get venture capital because he thought they would run the business and ruin it. And amazing, he went to a trade show. He convinced two Silicon Valley venture capitalists to put a term sheet to us, which they'd never put a term sheet to anyone outside of Silicon Valley before. And they flew out here, and the first hour was okay, but then totally arrogant, totally obnoxious, and it was very clear they wanted to get rid of all the people here except the developers and move it to the US. And I looked at this customer. They had about 12 websites we were going to do, and we just started 2 or 3. And I said, you know what? I think this could be big enough that we may be able to do without them. And so we took that risk, and it took longer than we thought. But sure enough, October 2005, I'll never forget that month. We were profitable our first month,
Oh, wow.
cash flow positive, and then I would go into the office and in the morning and find out we had made $30,000 on a website because people were searching and clicking and buying while we were asleep. And then it became really exciting during that period when things went really well.
Okay. So that brought up a question that is very important, because you had to decide to make a decision not to cut off and not to get investment. If you're advising businesses as to when is a good time to get investment and when it's not, what will be the conversation we have as the founders? Like, are you investor ready or not investor? Yeah.
Well, yeah, I think there's a lot to unpack with that. Like, first of all, the question is, can you actually get investment? Like, in most cases, the answer is no. Are you ready for it? No.
Yeah.
And therefore, you should focus on getting customers. They're your best investment. This is one thing Australia does really well compared to the U.S. Because there's less investment capital, people here understand the need to get cash flow from customers, where in the U.S. they think, oh, I'll raise millions of dollars and hire a bunch of people and we'll figure it all out later. Here they understand, and this is fundamental to business. And what we've seen that in 2021, they were raising a lot of money at very high valuations, and then the bottom crashed, and they all started sacking people because they said, well, look, we may not be able to raise any more capital. We need to be capital efficient and reach profitability, because then you control your own destiny.
Yeah.
Before that, it was all about growth. Grow revenue as quick as you can, because an investor wants to sell as quick as they can and get their money back, and that depends on your revenue growth, the size. So, but yeah, so figure out, are you investable? Sometimes if you have a track record, you work for another company, you know people, maybe you can get some family and friends. Match that with grants. That's another advantage we have in Australia. You can get government grants.
Yeah.
The best time is when you have a product in market and it's working and customers really like it and it's ready to scale. That is the best time to raise capital, because you know the money you raise will be worth, your company will be worth a lot more, because you've hired salespeople, you're doubling your revenue every year or so, and increasing the value of your company.
Okay.
But I see a lot of, like, when I was mentoring a lot of students, I'll have an idea. I think I'll go and raise capital. And I said, look, just having an idea isn't enough. You've got to show some traction, or that you're someone who can make things happen. And often that's bootstrapping by, just doing the work yourself, investing, getting family and friends, getting some grants, but get to customer traction as quick as possible will make you more valuable.
Yeah. That makes a lot of sense. You have to have some traction of some sort. Well, you guys were trying to scale your business. You said you had lots of periods when, you know, it wasn't, you hadn't started breaking even or making a loss. At what point in time, at that point in time when you're going through that rough time, how was how do you, and that's more like a mindset slash mentor question. How do you guys stay consistent and focused and keep plugging away? Because a lot of times when people go through those kind of seasons, some people actually quit. Maybe they quit prematurely before the business is able to do that. What was it about you guys and that helped you persevere through? Was it having clear projections? Was it knowing the business? What's going through your mind at that point in time, and what's helping you?
Well, I think, when you, like, leave full-time work to do a startup, you don't have any other option but to work really, really hard, where the opposite would be you work in the government, you pretty secure, unless you're in America now, but you're in a pretty secure job. You don't worry about anything, and if things don't happen, well, that's okay. But if you're in a startup, boy, you know you're going to be running out of money. You got to make things happen really quick. And so I compare it to, like, going to war. Like, you're landing on the beach and you're getting shot at, and you got to try to take the hill. But it comes down to having really smart, highly motivated people. And I believe successful startup founders, to do that, you have to be about top 1 or 2% of the population, because it is really, really hard. And I think a lot of venture capitalists who've never done a startup, they don't understand how hard this is, and what it takes. But you're looking for people who are really resilient, who are really super smart, who are really skilled, who a diverse set of skills, like the ability to sell, Like our CEO was charismatic, could sell the vision, get investors, get new customers, and convince really smart people to work for us. Like, you're going to change the world. That's what Steve Jobs did really well. He sold the vision. So I would say once we were successful, we were not as united as a team as we should have been,
Okay.
and didn't innovate like we should have. But that's happened. So
Do you know what probably led to that not innovating anymore once you're successful? Is it complacency, or is it that technology is changing, or what's happening around that time?
yeah, well, I don't know how to explain it. Maybe sometimes people's egos get in the way of things. You have different point of view. You're not as hungry, you know. And you probably see this in large organizations where all of a sudden then they become more political. It's not about getting a result for your customer. It's not about doing what's right for the company. It's all about personalities, and they're all different. Every startup I've invested in, each founder is different in their own way. They have their own pluses and minuses of their own skills, but most of them are really determined to succeed.
With your previous company, Amigo, did the initial founder take the company all the way to CEO? Or I guess what I'm trying to find out is, at what point in time do you believe a company starts to outgrow the original founder CEO to a point in time whereby
Yeah.
they need to?
I think it depends. Look, I left in 2012, and the last thing I had heard prior to Christmas is it was really struggling. It had lost most of its customers and really struggling. So I don't know. I really don't know what goes on. But yeah, I think I don't know why people would stay on when they don't have the same passion.
Yeah.
And so, yeah, I think some founders don't know how to scale a really large company. Some do, and like the founders of Atlassian, one of them's still there.
Yeah.
They knew how to do that. Canva, Melanie and Cliff and
They've done really
are
well.
still there, yeah, extraordinarily well. So some of them, and that's an advantage of venture capital, in that they network with and provide resources. So I'm sure like Mike Cannon Brooks and Scott Farquhar probably gave a lot of advice to, I know they have for Culture Amp and Safety Culture and Canva, like, here's how to scale a business. And it's great having that expertise. And as Australia has more success like that, you'll have greater mentors. I did want to say, it reminds me of one thing, though. I did want to mention, though, one of the advantages of a angel investor is, compared to investing in a venture capital firm, a venture capital firm will spend about 20% of your investment on their management of the firm, management fees. And the other thing is, if you have a success, they take 20% of the profit. So as an angel investor, you do have a little bit of an advantage in that you can invest directly in a company and not pay a management fee or a percent of success. You would keep that yourself.
Okay. So you're starting out, you're better off, I guess, going with a seed.
Well, the advantage, of
angel.
course, a big venture capital firm like Blackbird, they would see all the good deals. I wouldn't. I think I would have an advantage as an individual in that I don't have to get anyone's approval on what I can and can invest. And so I would say my own individual portfolio is, I would guess, is up about at least 9 times what I invested at, which would put me in the top 1% of any venture capital firm.
Okay.
So, yeah, it's not easy though.
Yeah, it is. It
Very
is.
risky, and I
Yeah.
know a lot of people will lose a lot of money investing that aren't really know exactly what they're doing, and sometimes it is a bit of luck.
Yeah. Like you said, it is a very long-term game. When we were talking about founders in resilience and being able to stick through and do that, you said it's you gotta be the top 1%. But I guess a lot of people they don't start up that way. Do you think it's something that is a learnable skill, something that can be taught, or something that if you're
Well,
sitting down with someone who is a founder, and you know this is starting to get a little bit of a warming, and you need to give them a pep talk. What is it that you can draw from your experience to say to someone who is struggling with that?
yeah, my
Juggle.
opinion is most people, like sports stars, they have the skill. Now, some of those sports stars don't put the work in and they won't succeed. But look, I'm never going to be in the NBA. I'm 5'8". It didn't matter how hard I practice and try. So I believe most founders have that inherent skill, but some have different sets of skills. So some are charismatic, visionary salespeople. Some are brilliant technically. I think Bill Gates would be more a technical guy, where Steve Jobs would have been the visionary sales guy who didn't know how to code or design a circuit board, but he teamed up with Steve Wozniak, who was he went to my high school also, and he got perfect SAT scores in math, and he was brilliant. So I think one of the reasons I think YourAmigo was successful, we had people with different skill sets that were excellent at what they did. Our chief technology officer was the highest matriculate in the state and one of the top engineers at the DSTO, and our CEO, young, energetic, charismatic. And then I can't sell, but I have great analytical business skills. And I think part of success in business, especially in investing, is pattern matching. You've seen it a lot before. You know what works, what doesn't work. You look at other ways of doing things. So I had really good business skills and understanding of the U.S. and Silicon Valley, which most Aussies don't really understand it. They actually think people there must be geniuses or something, where they're just there's a lot of mediocre people there in high positions because there's so many opportunities. We're almost the opposite here.
I think you told me when we were having a chat before that you're not actively investing at the moment.
No, and there's a good reason for that. So I'm 70 years old, and I'm still waiting to cash out on things I invested 12 years ago. And so it looks to me like it's now about maybe 15 years to exit, to cash out. I would be 85, assuming I'm still alive.
Yeah.
It doesn't quite make sense. But also I think I kind of burnt out a bit. I found one of the reasons I wanted to invest, my primary motivation was to have an impact on Adelaide and help the next generation of founders who were like me, struggling and needed some help, because finding investment capital is very difficult. But I found, for some reason, including our company, they didn't really, it was more a financial transaction than bringing your investors and shareholders along in the journey. Because I think as an investor, Yeah, yeah, you want to get a good return, but what you're really are they doing well? Are they struggling? What are their issues? You want to feel like you're part of the journey, and most founders don't manage that well.
Okay, they don't manage the communication. Is that
So,
they don't manage the communication, or they don't manage those transitions?
well, they don't communicate as well with their shareholders as I think they should. I do have two that I get like a really good quarterly report. There were ones that had venture capital investment, and so the venture capitalists demand that. And so all shareholders get really good, informative updates. But yeah, with a lot of startups, you can tell one that's not going well. You don't hear anything from them.
Yeah.
But I think even if things aren't going well, you let them know and say we're trying to resolve this. And sometimes your shareholders may have connections. They want to see you succeed. But a lot of it's to feel you're part of that journey, that you made a difference. And so I'll feel like of these companies, maybe after I'm long gone from the face of the earth, they're still going and they're making a difference in Adelaide. They're employing people.
Yeah.
They're creating some wealth, which wouldn't have happened maybe if I didn't invest.
That's exciting. So you've talked about your main motivation of investing being wanting to create a better solution than what you had. When you are going through your own process, you and your co-founders scaling YourAmigo, what are some of the things you wish you had, other than obviously the capital? Capital is always going to be a big one. What are some of the other things you wish you had that if we had some of these things in place, it would have made our journey a lot more easier, a lot more smoother, and we probably would have gotten there faster without all the
Yeah.
Is that where you got most of your gray hairs?
The interesting thing is we pivoted probably about 3 times. We were originally going to be an internet search engine, and then an intranet search. Then we made websites visible to Google, which moved us into automated SEO. We were the only company in the world then to do that. And then our CTO had a brilliant idea. We could expand a website with 900 products to 30,000 pages based on popular search phrases that people searched on. And they had content, but they didn't have a page. And we used technology to do that. Sometimes I think you can't go much faster than you're ready. Like if we had raised $5 million right away, we might have not resourced that correctly. We might have focused on internet search or intranet search, only to find there wasn't a big market for that. Of course, having money makes it easier because you can do more things. But sometimes you learn by trial and error, and that's maybe the advantage of a Australian startup is they have to focus on getting customers and money in rather than investors. The U.S., they just think, let's throw a lot of money at it, and then it will scale and grow really quick. But that kind of wastes the investment capital. It's called capital inefficiency.
So they haven't found good product market fit. So they're just deploying capital for the very long reasons.
And a lot of times the startup is trial and error. You try things, see what works, see what doesn't work.
Yeah.
And of course, if you have more money, you can try more things.
Yeah.
But you have to be smart how you allocate your money when you don't have a lot.
Yeah. So in hindsight, what you're saying is, looking back at your journey, it's a case of it takes whatever it needs to take to get the business to a certain level. Sometimes it's not about getting there quicker. It's about the things that
it's not about like the speed. It's about the things that need to be in place for this business to scale. Would that be an accurate assessment, or?
Well, this is where it's critical to have a great founding team. I heard a podcast of one of the very successful venture capitalists in the U.S. He said 85% of his successes were in companies that pivoted. So he invested in one thing, but then it changed into something else when they got out into the market. And that is the advantage of having really smart people who are creative and innovative, but also having the money to be able to do that. So I thought that was quite interesting, and I've seen that. A good example, there's a local company, Fleet, that was...
the space company.
Yes, Blackbird Ventures invested in them, and I have an investment through Blackbird. But originally they were going to monitor like rainwater tanks in the outback or something through their nano satellites. And I thought, oh, that doesn't sound too exciting to me. But they pivoted, and now they found that they can find what's underneath the ground, which will help mining companies know, is there gold under there? Is there lithium? What is, and it reduces the amount of drilling they have to do, and they can find ore deposits, and so they've just taken off tremendously. So that's where having really smart people on the team, even if their initial idea isn't a success, is valuable. They can pivot into something else.
You've done most of your business as a team. What's your strategy for, I guess for lack of a better word, running a startup with other people, managing differences in opinion, egos and all that kind of stuff, and still being able to, because you started together as a whole bunch of people from a collective from the different companies you've worked for, and then you managed to grow to a company to a certain stage. What are some of the lessons you learned from those partnerships? And
I think it's one of the hardest things is always the people side.
Yeah.
So YourAmigo, it was easier because it came from a very successful defense company team. It's almost heard of like a defense startup would sign up $30 million in contracts and go from 0 to 55 people, where your customer is very, very risk adverse. So I felt that this was the brightest group of people I ever worked with.
Gotcha.
And initially we worked well as a team. I think as things went on, maybe it's kind of like some marriages, which I've experienced, by the way, it kind of falls apart at the end. But I think the important thing is having the right chemistry and building a relation with people. Maybe you don't start out right away as a 50-50 founder. You work together on some projects, see how things work. But there is no easy answer to that. I think a lot of it is chemistry, but a very important thing from what I saw, a key reason why we were successful, we had diverse skill sets. So it's not like we're all engineering or all sales. We have technical people, business people, sales ability, and that makes your team strong.
That's awesome. As we start to conclude the interview, what are some of the things, I know you're not actively investing, but you still got your ear out and you're still seeing what the market is going. What are some of the things you're excited about in the market, and what are some of the things you'd be like, ooh, you better watch out there?
Well, I'll tell you what I'm not excited about. I really believed that we would see in the America, which affects everything, that we would see maybe 2 years of tech doing really well, the stock market doing really well, and then the companies doing mergers and acquisitions. And now we're seeing the stock market melt down. I don't think they know what they're doing there, to be honest. And I think it's going to be hard to recover from this, which means, again, another few years of uncertainty. Eventually, if you are invested in a company that produces a really good product or service that people need and want, you're going to be fine in the long run. But you want to sell out when the market is really hot, and not to sell out when it's not doing well. So this really concerns me.
Yeah.
What I'm seeing. I think it might kill off. I thought we'd have a really strong IPO market. There's been very few in the last couple of years.
Okay.
And that also ties into mergers and acquisitions. We've seen a lot fewer of those in recent times. When things start getting hot, that's when companies go buy other companies. They list and go public. So that's my concern right now. But you know what? At the end of the day, I've done well enough. It's not going to change my life.
Yeah.
But it's a bruise to my ego.
Yeah.
Because I wanted to say, yes, I Canva listed and I'm, made all this money, but I've made good money already, but I feel for a lot of people, they have their retirement invested in the stock market, and it's a self-inflicted loss, which it shouldn't have to happen, but it did.
What about some positive things that you're excited about in terms of looking forward to seeing, or some trends you're looking at? If you had to go back in the investment cycle today, what are some of the things
I never, as a investor, I never had a preconceived idea. I had some ideas, but I just looked at the idea, the merit on its own. So the one company that's grown slow, but I think could still be $1 billion company. They did processing of customer purchase orders and invoices. I really understood that because I was an accountant. Yeah. But another company I've invested in, Biogen, which I loved, and I think I understood that too. I think all of them that I invested in, I kind of understood. But Biogen was a PhD studying at Adelaide Uni who developed a way to produce activated carbon at 40% of the cost of traditional methods in a way that was carbon positive, and he could customize the activated carbon to filter forever chemicals like PFAS.
Okay.
And normally I don't like a hardware company. That's my preconceived. I like software and ones that sell to businesses. Normally I wouldn't go for that, but it all adds up. There's not a lot of competition. He's the only one that really has figured out how to do this. It's a huge industry, it's an old industry, but it hasn't been really innovative, and he's come up with innovation. He's starting to get real traction.
Okay.
But the one of the challenges is it takes a couple $1 million to install this equipment. So he's convinced the almond growers who have all these almond shells, build one of these pieces of equipment, you pay for that, and I'll charge you a fee a license fee for the service, and you can turn that almond shells into activated carbon. Okay. That's something else he does is unique. A current method is they dig up coal and convert it to activated carbon. It's used for water air filtration. So I don't go into looking at something. AI is definitely hot space. I don't know a lot about it, but I've met one of the investments Blackbird Ventures made was in Heidi Healthcare.
Okay.
and he had an idea of using AI for medical diagnosis. And being a patient who's been misdiagnosed several times, I thought it's a great idea. But he then pivoted because they didn't want that. It was too difficult for them. But it now writes up their doctor's notes for patients that they'd spend an hour every day writing up their patient notes after work. They now do AI. He's really taken off.
Okay.
So it depends on each individual thing, and you look at how unique it is. There are a lot of people doing it, and is he doing it way better than everyone else?
So the common thread being the founder and the market and what they're really working on.
Yes, this founder was a doctor, so he understood the problem.
Yeah.
Again, that's why I say you founders need to come from somewhere,
So
and you'll get better founders if you have more industry.
Absolutely. Now, I've picked up a common thread here. So, final question. I had to ask this one. This is just for my own curiosity. What does a retired guy do all day?
What's a retired guy do?
What does a retired guy do all day?
I don't know if you saw my old business
I
card.
know. I remember you had a very funny business.
I was unemployed, lazy bum.
Yes.
And good question. I do read a lot, and I get a lot of my information on YouTube. I'm married to a wonderful, wonderful woman, and you know my wife.
Yeah,
and
Kinda, she's awesome.
I'm very, very lucky.
She's
we
awesome.
We are really big in our garden. We have a nice house in Seacliff, and we're going to be on Gardening Australia on the ABC.
That's exciting.
We don't know when. But I built a big pond system in the backyard and an orchard in our gully, and we spent a lot on the garden. It's a tropical looking type garden.
Yeah.
And then I love to travel. I've been to 59 countries so far.
Wow. That's
And
a lot.
so, we went in October to a month in South America, and in the prior year we went to Japan and Cook Islands and Bali, and then in July we'll be going to East Africa. So,
Awesome.
but yeah, just play things by ear, see what comes up, and
Exciting.
but I don't stress out too much. The one problem is, even when you have, well off financially, that's when I wound up going through a divorce and estranged from my adult children. So it doesn't mean you're going to be happy. And then now at 70, then you get health issues. So nothing in life is ever easy.
So I really appreciate your time today. Thank you so much for your insight. What is the best way for people to follow you, connect with you?
Look, if there's someone who's serious about doing a startup, look, I'm not investing now, but I'm happy to mentor someone who's really serious. I have met a lot of, I've got an idea, will I get funded? Will you fund me? And not too keen on that, but someone who's really got a lot of determination will follow up on suggestions, and just contact me through LinkedIn, and I'd be happy to meet up and share what I know, because I think I do have a lot of really good experience in the Australian startup community and investment community.
Yeah, and you've always been very generous with your time and supporting a lot of people, so myself included as well. So thank you so much for your time, and thank you.
Well, thank you, John, and I've gotten probably more out of mentoring than I've given it. I think that I meet a lot of really bright, motivated people, and it makes it all worthwhile.